Let's check in with the markets now. Tom Piotrowski is back. You weren't here earlier, Tom. Where were you?
I was distracted with a technical issue, Pete.
Right, yeah,
my colleague Craig James ably stood in.
No, ably did, yeah. But you're sending in your deputy. I'm after the chief. I'm always after the chief, Tom Piotrowski.
Well, Pete, I can tell you that rather optimistically, the market is expected to kick off in positive territory this morning. The futures are telling us that the SPY could be, the ASX 200 could be up by around 0.2% when we get off to the races. But the thing to look out for is as to whether or not we can hold on to those improvements. There are a lot of moving parts in terms of headwinds for the markets at the moment. Those geopolitical issues in Europe foremost amongst them. We saw a very brisk sell-off in European interest rate markets last night. German bunds were up by about 15 basis points. UK gilts up by about 0.25%, a little bit less than that. So that was part of the reason why European stock markets were under a deal of pressure. We had the French market down by around 0.4%. US stocks also lower, technology stocks leading the declines, the Nasdaq down by almost 1%. And what stands out here, Pete, is that the Philadelphia Semiconductor Index, an important forward-looking measure of technology prices, fell to its lowest levels in 2 years. The US government is enacting curbs, essentially, which is going to prevent the Chinese accessing US chip technology. Another example of geopolitical tensions. So, along with the US inflation figures, which are out later on this week, there's a lot to keep investors on the sidelines at the moment. But today, in local terms, we'll be looking at a number of AGMs, including Telstra, so keep an eye on that. And then we've also got the monthly consumer confidence figures out due today from Westpac and the Melbourne Institute.
Okay, Tom Piotrowski, thank you. We'll talk to you soon.